Okay, so my point is this. Is that if we had a room of 100 people here, and I said to you, and then we took a poll, and I said, are you for the next 6 months dollar bullish or are you dollar bearish? You'll probably have more people saying dollar bearish than bullish. But I bet it wouldn't be a 75-25 split. I bet it would be somewhere closer to 55-45. Alright, or even maybe close to 50-50. Alright, myself, and this may be a state of denial, but I'm actually a dollar bull. I think that, we're just waiting to gain a little bit of traction. We need the government to stop the nonsense. Alright, we need a shift in policy. But overall, I think that the dollar I think that all the austerity stuff in Europe is ultimately gonna hurt the euro, and I think the dollar is gonna prevail. So, it's a long run thing, and with Thomas, this isn't a short, that's not a short term, it's not a short term statement by any stretch. So it's a long term thing. Alright, now, that said, how does this apply to the subject matter for today? So, if we were talking about long-term trades, all right, and that's what I wanted to call this, defining trades. All right, one, we want a bias on this stuff. All right, so it always sounds like a cop-out saying, well, what is your, what's your bias? Well, that's, given that, that's actually an important piece of information. All right, because here's an example. Okay, the reason why I'm saying bias is because I strongly recommend, for many reasons, just trading with your bias 95% of the time. Okay? And the reason for this is a couple things. One is, I don't know about you, but I just feel better about it, and feeling is sort of a subjective thing, but I feel better about trading in alignment with what I think makes sense. Alright? Even if I think, here comes contradiction, even if I think what makes sense isn't what necessarily should make sense from an economic standpoint. Okay? So in other words, I think that the dollar should gain ground. Now, does that necessarily make sense economically? No, probably not, because of all the QE and things. So it probably doesn't make economic sense, but it makes sense to me in terms of what I think the relative strength of the market should be. Does that make, am I articulating myself? So in other words, I think that euro is going to be relatively worse. Does that make economic sense? Probably not. Okay, so in other words, trading with your bias is better, is just easier psychologically. It provides you that little edge. And so in other words, if you were a dollar bull, for instance, here's a dollar index chart, where are some levels where you might consider taking a dollar buy on the longer term? All right? And it's not difficult, right? You can just define support areas. I had this little bounce zone here last week or the week before. This is a weekly dollar chart. And we bounced off this, came to the resistance, and then it pushed down a little bit. And that was effectively that 134.50 area. But you can see that the 78.5 zone has been a very good support area for the dollar. So that would be an area that would look for the dollar to gain some ground. And maybe even, at that point, take us back. You can see that it bounced here, 3 points every time. Okay? So maybe that's a great spot for this to go back to 81.70. Okay. So in other words, if I'm dollar bullish and I want a long-term position, I'm going to bust out some support on a longer-term chart. Now, said differently, our little poll that we took, the 55 people that were dollar bearish, if they were prospectively going to take a longer-term dollar bearish position, where would they do it? Well, this looks like resistance. So they would line up their little trade up here. So you get bears and prospectively bulls. All right, and in between, we got a little bit of dead area, don't we? Right, because all of this, hang on, we got a little bearish area which we've defined. We got a little bullish area which we've defined. And it's really not difficult to find these areas, right? Then in between, we got this sort of rangy fluff area here, don't we? So once again, what are we doing in between? We're probably taking some little spot trades if possible. We'll talk about those. But what I'm getting at is, those folks that say, I want to be a swing trader. That would be with an I. That's great. Awesome. Step 1. Define a bias. Trade, this is my humble opinion. Now, what's stopping you from saying, I'm just going to short here, and I'm going to long here, and I don't have a bias? Hey, more power to you. More power to you. But the thing is, if this starts to go wrong, let's say this comes up here and starts to push through the bearish zone, you're going to be the first one, if you don't have a bias, to go, ooh, I don't trust this. This looks terrible. And it just starts nudging through there till you get out of it, minus 80, say on the euro. It pushes down, starts to work for you, jump back in, cruises back up here. Oh no, it's not working, minus 60 again, so you go minus 60, minus 80 here. And then all of a sudden it rolls over, and because you've jumped out of it twice, you're not willing to get back in it. So in other words, you have no conviction. Look at the weekly chart regularly, Bookie. In other words, you have no conviction to what your bias is. And you can take losses. You can take losses by not having the fortitude to stay in a trade, even if it's a little bit against you, around a major zone. So this is one of the benefits for trading with a bias. All right. And number 2 is have a zone in mind. And that's just daily, weekly areas for resistance within the context of the trend. Okay. And arguably the dollar itself right now is very neutral. Very neutral. But there's still some buy low, sell higher areas. This is low. This is high. Okay, makes sense?